investors.
The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman. Yeah, this is Friday, the 3rd of May. And this is going to be very important because we're looking at those candles for May, because the ones in April were quite telling in the different, all the indices have different letters. All right, let's get going. Dow is up 465 at 38,697. Really strong move to the upside. Earnings on Apple really helped it, but Apple's going to have a little problem here because it made a round number high today, not an all-time high, but a round number high on that explosive move to the upside after the buyback. It's really buyback. We're not talking about the results. I thought the results were kind of okay, not great, but they were okay. But here it is, on trading, tootling along in the 173 area yesterday. Whoops, hits 187.00, round number high. It's trading up 10.70 right now. We'll see where it closes. It's very important. And Amgen was the other Dow stock that came out with earnings and had a really successful opening. It was tootling along in the 278s. Today it opened at 313.39, went all the way to 322.60, and it's trading right now at 315.20. Amgen Biopharma. Leg D in the monthly chart will start, I think, around about 3:30. Let me just give you the exact figure. There it is. It'll be 3. Wait, is that right? Can't be 280. It has to be 3 something. Yeah, there it is. Now, why is it not giving me the number? There it is, 329.72, 70.73 starts your leg D. All right, let's get back to our story. Actually, while I'm doing this, since it's Friday, and I usually try to do this on a Monday, and then I do it again on a Friday, technical Friday. So let's just get into this. Look, the Dow, we have a little sip of, there are. The Dow weekly made that peak D. Remember, I called it a phantom peak D because it was in the futures, but it wasn't in the actual Dow itself, Dow cash. So it went to the 39,889 level back on the 21st of March. But look here. You see the way that 9-period moving average has been so strong? And you see the way the markets pull back, the prices pull back under the 14-period moving average for 1 week, 2 week, 3 week, even this week. But that green didn't budge. It's still very positive. That's a good sign. And that says to me that the arch pattern that I call the possibility of a dreaded H, and all that is move this away, and I'll show you right here. There it is. This is this pattern right here. I have to move a couple of things. There it is. Where the price comes down sharply, tries to rally, and then it fails at a peak A or a B, retests the left side low. Well, what we're looking at here is that it's popped up. This is what I call a gray A, because under that peak D. But the MACD, the stochastic, not the unbalanced volume, those are very negative. The 9 is holding the 14. So there's a chance that over the next week or two, if this rally doesn't hold, going into Thursday of next week, so you've got to give it a few days, and we start to pull back quite sharply, how this arches over or how it forms a V shape is going to be those are the two patterns we're looking at, either the V shape or the arch where it rolls over. But so far, nice action that we're looking at. And here we go with the S&P. The S&P right now is trading up 53 at 501.7.26. Now, I drew the arch formation. I can now extend this. It's not failed. It's maybe a work in progress because there's going to be two patterns that are vying for one another. Remember, we're only looking at these as potential patterns. It doesn't say it has to do that. It does not know that I've drawn lines around it or arches, right? So that says it could fail if by next week, Wednesday or Thursday, it started to come back and the Dow slides under 50, the S&P slides under 50, 60. Yeah, Right now, the 9-period moving average is making a W formation, but it hasn't crossed positive. It could still do that, but I'm calling this a leg C, and it's still, I'm waiting for the close. I should put an up arrow because it's already at a peak C, but look, the stochastic's very weak at 44%. The MACD has finally crossed positive, and the relative strength index is moving up, but I need that 9-period moving average to close over the 14. Look at the weekly chart. Remember, this is the one that I say, that is a peak C. There's no way I can call it anything else than that, but if you go to the futures, it's got a leg D, and that went to a peak D. So there's your D, the obligation to get you to D. It's complete there. But look at that 9-period moving average. It's way above the 14. To get that pink, in other words, to get it across negative under the 14, you'd have to see a price in the 4,900 and maybe 20 or 30 area, more than 100 S&P points below that. I think that's going to be tough to do. Okay, so within that context, let's look at the QQQ. So the QQQ dips very sharply in the weekly chart. 9-period moving average still held, and on this little rally that we've had over the last 2 weeks, the green 9-period moving average has actually risen, so that both the 14-period and the 9 are in the same trajectory up. So to get that to cross negative, you'd have to see the Qs down below 410. And right now they're trading at 433. That's a big move down. However, if you look at the weekly chart, that 9-period moving average right there is still quite a bit under the 14. So you've got to be aware that here again, I don't know if I can put an up arrow here, meaning that it should go to a D. Not yet. I need to see the close on the day. If we give back a big chunk, now the Dow's up 381. If we give back a big chunk, let's just say by 1:30 this afternoon, the Dow is only up 180, and that by 3 p.m. Is up 80 points. That's kind of a failure pattern. And that's going to say, don't forget that you could still have an arch formation right here rather than the V shape. So far, it's positive. MACD has turned up, but the QQQ is still a work in progress. And I have to include the SMHs here because you can see that they have not made a new recovery high from the high that was made 4 days ago at about 219. Here they are at 216.17. They're only up 467. And that's your lagging indicator. I respect the SMHs as a barometer. Does it always work? Not 100%, but wow, it really is a great barometer. When it makes new highs, the market is going to make new highs, or they're very close. One might lead the other. But when the SMHs start to fail like they are now, just on the short term, I've got to respect that. But that weekly chart says, what are you talking about? The 9-period moving average is still way, way, way over the 14. The SMHs, the semiconductor Van Eck ETF, would have to go and trade for about a week in the 197 area, 198. I don't know if it's going to do that right now. In the meantime, it's acting quite nicely at 453 at 216. I want to go to the IWM, the Russell 2000. Give them back a chunk of that big move to the upside. Trading right here. It hit 204.16. Yesterday it was tootling along in the 198, 199 area. It's at almost the low of the day, up 2.20 at 202.15. I'm a little inclined, I'm favorably inclined towards this, and I'll take one.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. So just real briefly, in the Chapman methodology, you try to identify a low, and then you count the waves to the upside. It gets upgraded from a buy signal to a buy mode if the technicals are improving, and especially if the stochastic can get over 80%, which this did in the 1 minute chart. It went to a peak D at 51. 51 was that 65? Yeah, 65.75. And then it's been making lower lows and lower highs since then. And the 200 period moving average on the 1 minute chart is at 51.34, and that's kind of where it went. It's trading at 51.40 right now. Here's your peak, alternate count peak F in the 5 minute chart. The green 9 period moving average is very close to turning pink. And the weekly, I always think of this as daily, weekly, monthly. It's 1 minute, 5 minute, and here's this automatic with Chapman wave resistance and support levels. You can see right here in this little gap. This is the 1 minute chart. So the 5 minute chart is pulling back quite sharply. It's going to be a peak F if it pulls back to the 51.35 level, and there's a chance that's where the green 9 period moving average will turn pink. I'm mentioning this because these are the exact techniques that we're using for the positions either that we have for my opening call newsletter or when I'm showing the charts. And here's a peak D in the 10 minute chart. Well, we've got another minute to go before it can be called the peak D. Now, remember, I always look at the market in terms of time sequences. It's not a consistent thing, but certainly it happens often enough that you got your early morning from early, maybe 6 o'clock in the morning, till about 8:30 until there's an economic news report. And then there's a second market that responds to that. And then the real market, I think, starts at 10:20. 10:20 to around about 11:30, 11:45. And then there's a hiatus. And then from 1:30 to maybe 2:15, 3 o'clock starts another market, and then you got the end of the day. If you think of them as microclimates, it really makes a difference because you can treat each one as a trading segment. So when I use the 9 period moving average, if I'm out, I'm away from the office or whatever it is, if I step in and I'm seeing something where the 9 period moving average flips negative, I could take a trade. You're right here. That's the way I'm looking at things. So let's just go back to the market because now we've had this huge move up. We've got to the 10:20 time exactly as I'm speaking. Look at this. IWM is at the low of the day of 201.63. Now, the reason why I liked it is that yesterday when I was looking at it, it was one of the only key indexes or in one of the indices that had successful, the pink 9-period moving average was getting really close to crossing positive. It made a peak B and a retest 3 sessions ago. Yesterday was a good candle, but no, I would have preferred it if it was a little higher. And then today it popped up and it's in leg C. So we'll see where this closes, because if it gives back a huge chunk, I mean, when you think about 198, roundabout close yesterday of the about 190, I think it was 198.80 or something like that. And it spikes to 204. This never does that, or hardly ever does that. That's a pretty big move. But what I wanted to say is what I was impressed with was that the weekly chart, this 9-period moving average holding so well, says there's a chance, and this is all we're talking about, probabilities, that money will start to come out of the huge big caps that are starting to stall. Where does the money go? When it looks more not at a sector within a sector, more it's a kind of a comprehensive look, and it might say, well, the IWB, which is the 1,000, this is the iShares Russell 1000, has already made an all-time high. It's digesting these gains, also in leg C in the daily chart and a leg C in the weekly chart. I don't know if there's any futures in this, but all I can say, that is a C. I can't make it up. That's what I see. It should go to a D, and a D already in the monthly chart, all-time high. I mean, that's amazing. Going to from the high of 2021 or January of 2022 at 267.13, going all the way back from having plummeted to the 190 level to 200, and I should type that in, 288.58, 288.75. Gosh, didn't do a sneeze yesterday, but I did a sneeze today. iShares Russell 1000 IWB. But look at the IWC. These are the microcaps. The microcaps had a very, very nice move in the weekly chart, going from below 90 to over 120, and then it gave it back. But not when you're looking at the peak C1, C2, and C3 multi-hit 160 area back in 2021. And yes, back in 2021, 3 times hit. And just missed making a leg D, and then plummets all the way down from the 160, 159 level down to, what was that low right there? That low was 90.73. So all I can say is that IWM might be playing some catch up, but the day is young, and we really need to see that it holds. It doesn't fill the gap. It gets maybe close. And by the end of the day, there's another bit of a buying spree. That's not good enough. You want to see the IWM to convince me, at least, that money is going to start flowing from, and it isn't often that fund managers say, oh, I'm going from the big leaders, the massive multi-billion, almost trillion-dollar companies into small caps. No, it's where money will be best treated. So you need to see a sign that IWM is beginning a leadership role in the beaten down area. And that's all I'm saying. And that's one of the reasons why I made a big deal about it yesterday when I was looking at it. And one thing I forgot is in looking at it, I wanted to also mention that I would like to see the XLF, which is the SNX Financial, S&P Select Financial Spider Fund, get out of this. I haven't even updated it, but this inside track repellent zone right here. Look at that. Oh my, look at that. How many times hit is this inside? This is a beautiful technique. If you want to learn it, this is a Technical Friday, so I'll talk about it. It's where I take 2 parallel lines, narrow lines, and I make a little mini channel. And I consider this a falling axe formation. I don't want to go into that right now, but I want to say that within that context, if you get a break, a sharp break above this trend line, that suddenly, instead of being a repellent zone, look how much is one just in the most recent, in the month, 1, 2, 3, 4, 5, 6, 7 times the pink line has been hit and the green line has almost been touched and it hasn't broken above it. So that's the XLF. Then we have to put the KRE. And the reason why I want to put the KRE is within the context of the rotation within a sector called the financial sector. You've got the regional banks. The KRE is up 65 cents at 49.67. I've been waiting for this break of this Chapman wave inside track repellent zone. We've got it, but we've got it in leg D. We've got to be a little bit careful, and the weekly chart shows you right here. It's the same thing. So if the regionals, you remember, in the banking sector, just as I'm talking about the general market, you can take your big caps, or you can take your small caps. How does it relate? How money has to flow. In other words, if something like an Apple by Tuesday is actually, instead of at 183 right now, it goes back to the 175, 174 level, that'll say, ooh, money is not being held in all the big caps. Even Microsoft has given back some of the gain, earlier gain. Microsoft trading at, oh no, this is holding well, up 7 at 405. That's much better. I'll be back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
There was a question yesterday about DuPont, and I just didn't get to it because we ran out of time. So DuPont is looking, it's down 5 cents to 77.70. It's made a leg D right in the Chapman Wave inside track repellent zone. I mean, how important is that? Look, it just cannot get out of its own way. I'm going to move this across like that, lower the letter so you can see ABC. There it is, leg D. Having made a low down just below 50 in 2022, this is a leg C, and it's above this particular trend line, a slightly shorter one. Let me show you. This is the longer one, peak C1, C2, C3. Remember, we were just talking about that in whatever stock it was just a moment ago we were looking at. And lo and behold, this is right in the inside track. The MACD is good. Stochastic's still quite weak at 64. Unbalanced volumes, not so great in the monthly chart, but the 9 is still strong over the 14, even when it pulled back. That's what I'm using the same technique here to say if the price holds very well, when it's underneath, very much underneath the 14-period moving average, yet the 9-period moving average right there is still green, that gives you a springboard to try to get back again, which it's done. So I love the fact that I think it was earnings the other day that allowed it to spike higher. It's having inside bars. In other words, the high that was made is 79. Whoops, what was that? 79.19, and the low of 76.69. It's at 2 candles inside. This is good action. This is just saying that if it holds for another 2 sessions without taking out the 76 low, that's a very good action. That's going to help the weekly chart. And what it's saying then is making a high-level consolidation, which should have a pop to the upside. So, yes, so DuPont holding very well, especially if those were earnings and nothing else, just pure earnings. That's a very good sign to say it's in play, continues to be in play to the upside with higher highs and higher lows. But if it closes next week, any day, if it closes under 76, give me a yell, because that's not going to be a good sign. Shorter term, it says it's going to have to take a breather. With that said, the other one I had a question about FTNT, that's Fortinet. Now they're in the security, I don't remember exactly, Fortinet Security Solutions made a peak D in the monthly chart, a very choppy sideways, big range between 80 and 45. That's a big range. And yet it's making lower lows and lower highs. And today, the 9-period moving average, as we were speaking, the weekly chart, 9 went from S, now it's taken off. It means that the 9 is still above the 4. There it is again. That means it's very close to turning down. That's not a good sign, because it's taking out the I would have drawn a rectangle here using the base of right there. Ooh, I must refresh my computer in a short while. On the 23rd of February, the week of the 23rd of Feb, of this year, it made a low of 61.00, round number low, and now it's under it. Today's low is 60.23. 61, and it's taken it out, but it hasn't closed yet on a weekly basis. It's going to watch this. So now the question was, you've already had a trade from it. So you got the low, and you've taken off something. Okay. I didn't know whether you wanted. What I'd said was, when the question came in from Stephen the Den, I said, if today's action, it should have been upside down. I should have taken a picture. I could still do it, but I'm not going to waste time. I should have taken a picture of it to show that upside down, that's what most of the stocks are doing, breaking to the upside. This is doing exactly the opposite. There's the 200-period moving average. It hung around it for about 3 weeks, and now it's way below it. I'd be real careful, but if you did a trade, congratulations. If you're looking for a position, this is really looking like a short. Here's this candle, this island reversal, went to peak A, peak B, peak C, and then it hung around, and then finally squeaked to a D right there. What was the high? Did I say it was 73.63? And that was on the 4th of April. Yeah, I just be real careful. This is not acting at all like it should. Having held the 200-period moving average, you should have actually had a move to the 67s rather than the 60 area. Not good. This is a very weak stock. You have beautiful technique. If you are able to get the low, and then get out. But I think this might even close at the low of the day. So please be careful. Next question was, so Gary, I haven't heard from you. So I don't know if there's something wrong with my emails or whether you're away again. Sometimes I know you go away for a couple of weeks, but I haven't heard from you. But I'm going to do this just as a tribute to all your questions that you have or all your statements. FXI is the large cap China ETF. Now, I spoke about this yesterday, and I said it's acted extremely well from the low that was made back on the week of the 20th of January at 20.86. It made a trough F. I added Fibonacci low, and then so the 20. Remember, I've spoken about this so often. These double bottoms at 20.87, October of 2022 in the monthly chart, and then it goes to rallies all the way to the 30s, and then comes back to 20.86, and that's the week of the 20th of January, and now it's moving up. So that's a successful dreaded H so far, and that just says it's taken out various resistance levels, the 200-period moving average. This is still in the weekly chart, gray A. I still think this is a retracement at this particular point. It might be, it might turn into a full bull mode. The weekly chart peaks, leg C, fabulous move of the last 2 weeks. MACD is strong, stochastics at 84%. On balance volumes a tad overbought, and you can see that it's gapped up, and now it's at a peak D in the daily chart. So I'm going to give you these parameters to look at. FXI trading at 27.16, up 2 cents. I'm going to suggest that this gap, and of course it trades overseas, so it always has gaps, but this is a little bit more than just a gap. This is a gap because of market conditions. And I'm just going to say if it closes under 26.34, it's at 27.17 right now, anytime next week, give me a yell because I need to look at it, because that'll be after a leg D, today's leg D. That'll make it a peak D, and we've got to be careful. But the weekly chart is still very positive. I'm going to show you this in the wider time frame. Here we are. This is the weekly chart. Look at that big H pattern retest, a successful retest. It did go penny below, but it's a successful because within one bar, it was already breaking to the upside, and now it's tackling all these left side highs. So if it takes out, if it goes, today's high is 27.30, if it goes to 27.55, then this particular peak right here, that's the peak of the week of the 17th of November of 2023, 27.42. So if you go above that, then you're looking at the next resistance level on the week of the 1st of September of 28.40. I hope that helps out. But as I said, I'll be back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Folks, let's go backwards here. So I'm going to look at TGB, which is Taseka Myers question in the Den by Dan. This is a copper company, actually copper and other minerals, trading at 241. It made a high. I'm calling this a peak F in the Chapman methodology. A peak F high on the 29th of April at 2.71. It's trading at 2.41 now. It's had a spectacular move. My eye suggests this, the low that was made right here on the 23rd of 2.26. I typed into the Den that I think 2.28. Let's call it 2.28 to 2.26. I think it's going to be tested next week. If it closes, no, if it even trades under 246, which is the low of yesterday, there's a real good chance it's going to do an Eiffel Tower straight up, straight down. Looks like a little Christmas tree there. Straight down and test that level. The upside at this point, 250, I'd say is strong resist, 248 to 250. But it's had a spectacular move. I drew in the rectangle here on the weekly chart. I think it's going to have a bit of a rest. So let's just look at high-grade copper right now. High-grade copper trading 4.53, up just a tad. Also a peak F. It looks like TGB. It looks like Taseka Mines. And a leg D in the weekly chart. I think a little bit of a rest. 9 period over the 40, nothing wrong there. Just needs a bit of a breather after such a spectacular move. Question came in. Rochelle says, GST. GST is, are you sure you put GST? Did I type that right in? Yeah. No, VST. I don't know. You mean GS. I bet you mean GS, Goldman Sachs. That T was a mistake. Yeah, Goldman Sachs, new all-time high, traded at 442.30 high today. It's trading at 438 right now, up 5.71. I spoke about this a long time ago. Of course, we didn't get it, but I'd said when Goldman comes back, and it will come back, forget about all that stuff about it's a has-been stock. It's always in the lead since I did a whole webinar once on 1929 when it actually came public. Just an incredible story. They've always been there, major tops, always been part of the problem, actually. But anyway, leg C in the monthly chart looks fantastic. Leg E in the weekly chart looks fabulous. Leg D in the weekly chart, that makes the whole area 426 to 422. It's at 438 right now. Absolutely key support, looking very good. Now, I think, you remember at 10:20 I said, this is the part of the next session. I think this is where you're going to find out whether the new buyers come in. This is a fresh start to the day for people who just step back. Let's see where the E-mini is. So the E-mini made a low right there at 10:27 at 51.27.75. Retested at 51.28 at 10:36. That's a peak A. But this is underneath it. Since this is your starting point right here, that's an A right there. Should be trading right now. A, B, and there's your leg C. And the the 5-minute chart look at this, bumped into that automated Chapman wave resistance level here, pulling back. You need to see the 5-minute chart trading at 5.1. It's at 4.142. 5.149 to 5.151 to say, hey, now buyers are coming in. At this point, it's tentative buys. We haven't got any real conviction. Next question came in, and that was a question about, could I look at MSTR? I always like to say Monster. Wasn't that the symbol for Monster, or was that MNSTR? Okay, so this is MSTR. This is MicroStrategy. There it is. 100. This is unbelievable. It had a series of round numbers on the 27th of March. 1999.99 high, all-time high. Missed it by a penny, going to 2000. 1953 was the open that day, and 1942 was the low. Since then, I would say 1999 to 1010, let's call it 2000 to 1010 is almost, I would consider that about a 50% decline. Well, it's hit the round number 3 days ago, and here it is moving up. Let's see what NVIDIA did. It hit a round number. There it is, leg D. Unbelievable how these round numbers, I really need to write a paper on it after these decades and decades of monitoring. Okay, so here we go. 7, so it goes from 974.00 on the something like the 8th of March, comes tumbling down, and it gives us NVIDIA, one of the greatest stocks on earth, and then it comes down to 756.06, the low on the 19th of April, with a 762 round number close. And I mentioned that, and here it is. It rallies today, and it goes all the way to a leg D, another fib 618, I think it is, resistance level at 889.47. I think I just heard a little ping. A ping says, go to your engineer. We got Jose in Lakeland. How are you?
Good morning, the great Basil. How are you?
I'm well. How are you?
Well, I'm okay. Basil, when you start talking about pink lines and taking positions off, I'm going to be listening intently next time. That was a nice call before this tech wreck happened you made.
Thank you very much.
And I don't know how your tennis guy. I used to be an avid tennis player myself, Basil. I had to give up the game, unfortunately, not because of an injury, except every time I would lose a point, my Jimmy Connors T2000 aluminum racket, I'd throw it against the fence, and the game was getting too expensive, so I had to quit.
I've got some players that I've told them if they throw the racket again, every time they throw the racket, I'm taking a point. They've started to slow down. They're throwing the rackets. It's a very easy way to correct things. I don't like throwing the racket.
Yeah, it's a good remedy. So, Basil, Micron Technology, MU, anything? There seems to be a lot of shorts in there. High short volume.
Let me just put it this way.
Or puts, a lot of puts being bought on it.
So let me just do this. Micron Technology had a beautiful cup formation in the monthly chart. It screamed up to the 130 area. I think it just broke and didn't make a round number high. It went to 130.34 on the 4th of April. It's come down pretty sharply. It went down to the 106 level, but it's holding steady. Now, I'm looking at this, and my eye says that it's taking a breather. It's a peak, a leg C in the monthly chart. That says it's still going to go to higher highs. I can see it going to the 135, 140 level, but it has to digest these gains first. Are you looking to go long?
Yeah, unfortunately, I've got the May call, so I'm not going to make the earnings report coming out, I guess, in June, late June. That's a little surprising their earnings are so late.
Yeah, okay, so let me do this. If you've got the calls, it's holding quite nicely right now. And it's May. So May comes up real quickly because May has got Friday, you've got 3, 10, 17. So we've got this week, Friday, then you've got Friday next week. You've got 2 weeks. I think within the 2 weeks, there should be some kind of a bounce towards the 118 level. It's at 114 right now. I would suggest to you that watch it closely today. I don't want to see it close at the low of the day. It's at 114.4. We've got a break coming out. Let me do a little homework during the break. When we get back, I'll just give you a summation of what I'm looking at. The pattern right now is very static. I just don't see it having the strength to go much, much higher. But I'll be back in a moment. We're on with Jose Lakeman. We'll be right back. Dow's up 331. We'll be right back looking at
Tigers, you've seen his show, you've learned from his webinars, and now it's time to trade side by side with him. Join Larry Pesavento for the second month of his new service, Live Trading Fridays. Hosted in the Tigers Den trading room on Discord, Larry has analyzed a number of commodities and indices, placed profitable trades, and explained his method. Whether you're new to trading or are a seasoned market veteran, trading side by side with a titan like Larry Pesavento will only enhance your game. Utilizing Fibonacci retracements and ABCD structures, Larry provides decades of insight into when to place trades, when to exit, when to ignore, and so much more. Learning is doing. So if you're serious about learning technical analysis and becoming profitable in this uncertain market, Live Trading Fridays is a must-have tool in your arsenal. Live Trading Fridays occur every second and fourth Friday of the month, so trading events for this month are May 10th and 24th. If you're serious about trading, we'll see you there. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks. We're on. We're looking at. We're on with. Let me just find this chart before I do anything else. I had it ready. So we're on with Jose and Lakeman. We're looking at MU, which is Micron, and it's stalling right at this inside track resistance zone. So you've got 2 weeks, but today was a really good opportunity to show internal strength, and it's really not doing very well.
Yeah.
I don't know. You know, I used to think when I used to use options that the times I didn't take my cash off the table, even if it was half of what I put on, so that I could put it back for the next trade, and I just left it and it shriveled to zero, I used to say, you know, just if you're a little unsure, take it. If you're able to, take it a little bit off and give it a little room of another few days, and let's look at it again by Tuesday or Wednesday. I want to see it trading at 115.80 to 116.30. And if it can do that, it's saying, oh, it's got enough strength to try to pop a little bit higher and then gives you a better chance. But right now, it's just kind of stuck. Hope that helps you.
Yep. Yeah, it does. Thanks very much. I remember years ago you said, live for another day.
You gotta live for another day. I learned that the hard way. School of Hard Knocks. Thank you. Have a great weekend. Thank you. So, folks, let me just do this before we wrap it up. I didn't do all the stuff I wanted. I wanted to cover silver. Let me just do that right now. SI, silver right now is trading. Oh, dude, don't rush. There's plenty of time, 30 seconds or so. Yeah, silver, you see lower lows and lower highs, pink 9-period moving average. Gold down 7, lower lows and lower highs, pink 9-period moving average. Just the areas that have been very good, now they're taking a little bit of a digestive phase. And that's the reason why I say you can look at something, as I say, like the IWM, the Russell 2000, but it has to prove itself. You can't be thinking something. You want to see the market start to change its character by moving. Oh, the TLT, just as we go out, the TLT is up 51, giving back some of the gains. You want to see the TLT at 90.80, 91.30. That'll be a good sign. Say you, Steve Rhodes, everyone else on the show today. Hey, check out my opening call this weekend.